What's up? What's up? How y'all doing? How y'all doing today, man? It's Antoine Smalls Financial Blueprint. I am making a very, very special live today to go over beginners when it comes to the stock market and how you can start investing now. And I'm giving 5 practical tips on how you can start investing in the stock market. This is very important, right? In this current economy, I think that it's very important that we understand that investing is a requirement now, is no longer, a choice. If you want to succeed when it comes to your finances, when it comes to your overall wealth long term, you need to start investing regardless of your age. You need to start investing now, right? So what I get a lot of times is, I've heard people ask, like, I don't know how to start. What do I do? I don't know what to buy. All of those questions. I am here now to answer every question that you have when it comes to starting today, right? If you are a beginner, if you are someone that's looking to start investing, if you don't know how to, you don't know, where to begin, this is where you want to be today. So I'm live on YouTube as well as Facebook today, this afternoon. Take a second, subscribe to my YouTube channel, hit the like button, as well as leave me a comment. If you have any questions during this live stream, leave me a comment. I will answer them after the live stream, as well as, other possible issues that you have when it comes to these 5 tips, right? So let's get started. The first thing that I want to get to before we get to the 5 tips is, before you start investing in the stock market, you have to change your mindset, right? We have to break a fear-based mindset, especially in our community. We know that when we start thinking about investing, a lot of fear comes out. Oh, I'm going to lose money. The stock market's rigged. A lot of things come to mind, and it stops you from making decisions that will ultimately benefit you long term because of fear, right? So I'm going to bring facts to the table real quick, and we're going to take a look at the stock market since 1950. And for me, the most important thing that I like to take a look at is facts, right? And if you pay attention, right, to this statement, right, since 1950, what is the annual stock return for the stock market, right? Since 1950, the annual stock return using the S&P 500 as a benchmark. S&P 500 is the total stock market index for the United States. It has been approximately rising from 11 to 12% a year annually, right? If you adjust for inflation, which is around 3 to 4% a year, then the return is close to 8% a year, right? I always say that 8 to 12% is your threshold when it comes to investing in the stock market. That is the return that you are looking to receive. Some years are going to be lower than others, but then also some years are going to be higher than others, right? So if you look at the bottom, it says the long-term averages. These are long-term averages, right? Actual returns are, vary from year to year. And S&P 500 return in 1950 was 31%, versus in other years you might see negative returns. So when we first start this discussion and we talk about a mind share when it comes to shifting your mindset, you have to get to a place where you understand that investing in the stock market is not risky, from the standpoint that factually it is being shown that you make 8 to 12% on your money a year. Now, what do you invest in? How do you invest? Those are questions that we will get to later on. But from the origin, pillar, foundation, understand that investing in the stock market is a great way to grow money, right? And we need to, understand that and take the facts to show, not my opinion, the facts to show that you are more than likely to make money in a stock market than you are to lose money in a stock market. Now, you do have to understand what you're doing, right? Ignorance is not a thing when it comes to investing. You have to understand, you have to study, you have to do more information, you have to get more information. But all in all, from the basic standpoint, investing is not risky in the stock market, specifically if you know what you're doing, right? The second thing is there is a wealth shift going on currently right now in the world that you cannot miss out on. Right. So we talked about the first thing before we get started, right? First thing is fear. You need to get past the fear mindset. You got to push past that, look at facts and invest smartly, right? Second thing is the wealth shift. What is the wealth shift, right? It's the biggest wealth transfer in history of the world, right? Every day we buy things, right? Technology, we buy computers, groceries, gas, products, services, etc., right? We are always purchasing something, which means that someone on the receiving end, from a business perspective, is becoming richer and richer every single day. So when you buy computers, someone's getting richer. If you buy sneakers, someone's getting richer. If you buy groceries, gas, oil, etc., somebody ultimately is receiving the money and ultimately getting wealthy. So we have to get into a place where we start thinking ownership and not consuming and being a consumer. Right. I am not going to ultimately always buy things. I need to own things. The more that I own, the more that I grow my assets, the more ultimately I'm making passive income, the ultimately more I make money long term. So, one, before we get started, mindset shift. Fear is real. Fear stops so many people from investing. We got to push past the fear, look at the facts. And then secondly, get into the wealth transfer, the biggest transfer in history of the world when it comes to not just buying things, but also owning things to where then they appreciate from a value perspective and you can ultimately benefit from it long term. Right. So that is what we need to understand before we get started. Right. So if you like the content that's being created, please hit the like button, subscribe to the channel on YouTube. If you are on Facebook, hit the like button, share this with someone and tag them in the comment section for someone that needs to hear this information. This is one of the most important topics that we will talk about on this channel. It's the beginning stages of investing for someone that doesn't know, right, or has not started yet, or that is thought about starting, but they haven't actually taken the steps, right? So when we get started, the first tip I got for you is you cannot invest without a brokerage account. So the first thing is opening a brokerage account. So what is a brokerage account? Brokerage account is Charles Schwab, right? Robinhood, if you want to go that route. Fidelity is a great option. I actually use Charles Schwab myself when it comes to investing in the stock market. I have multiple retirement accounts, multiple, individual investment accounts. I also have a custodial account from my daughter that I've started investing for her future also. So Charles Schwab is a great option. Fidelity is also awesome. And then Robinhood has definitely done amazing things to start providing a platform for users to invest in not just stocks, but also crypto, option trading, and things like that. So the first tip is you gotta open up a brokerage account, right? It's similar to what you would be a bank account. You can go onto the website, you basically apply for an individual brokerage. And let's go to Charles Schwab real quick and let's look at how to do so, right? So I'm gonna share my screen. We're gonna go to Charles Schwab, and I'm gonna share to you real quick on what that looks like. Right. So we're on Charles Schwab's bank account now. Charles Schwab's brokerage account. I do have an account with them. So I'm not going to go into my personal account. I'm going to basically show you some quick tips on how to open up a brokerage account. Right. So open an account. You want to go to individual brokerage account. Now, if you pay attention right here, they have joint accounts. If you're married, I have a joint account with my wife. Me and my wife both have Roth IRAs. If you're looking at retirement accounts, got traditional IRAs here. You also got rollover IRAs. If you're rolling over a former retirement account to this rollover IRA, and if you want to just open up a regular brokerage account for yourself, then you will go to individual brokerage and then you will start filling out the application. Now, so the application is very much like if you were opening a bank account, right? You have to put your information in, your address, social security number, email, and then they're going to ask you a bunch of personal information like what's your employer, how much money do you make annually a year, how much experience do you have in investing in the stock market, um, how much trades or how many, how much money are you looking to put into the account consistently. They're just going to ask you a bunch of questions so that they can get the company as a whole can get an understanding of where you currently are and what level of brokerage accounts that they're going to give you, right? So you're going to start off at level one, which then it gives you the ability to invest in regular stocks, and do regular purchases. If you get to level two, then you open up to possibly start option trading and things like that. But this is not a intermediate or advanced level conversation. This is a basic level conversation. So you want to start off with level one and start off with investing in regular stocks, right? So opening up a brokerage account is the most important thing to start. You have to have a brokerage account for you to invest into the stock market. That is my recommendation. You have other apps like Webull and things like that you can do it on your phone, which is also okay to starting off. The more serious you get, I recommend that you get with a big brokerage firm. And I already talked about Charles Schwab as well as Fidelity and Robinhood, right? So that is the first tip, is you have to open up a brokerage account. All right. So number two, you have to start understanding what you're investing in. What I would recommend is you choose 3 companies that you love, right? 3 companies that you love. When you first start, and you don't need to make this as complicated as it can get, because it can get very complicated when you're looking at all of these stocks. What 3 companies do you love that you want to invest in over the next 10 to 20 years? Right? And how do I choose those 3 stocks? Right? I would say, again, very easily, think about this. What companies dominate the world? On top of your head. A lot of times we know the answer to these questions. We just don't think about it very, very practically like that. Right? What companies are the best in their sector? Right? When we think technology, what companies do we think? Right? Most people think, Apple, Microsoft, Amazon. Well, Amazon is a consumer discretionary, but also a technology. It kind of retail. They're kind of in multiple sectors, right? So Walmart, right? If you think in semiconductors, when it comes to AI, you think Nvidia, you think AMD, Broadcom, things like that, right? If you think in healthcare, you think Eli Lilly, Stryker, things like that. So when you are considering what companies you want to buy and what companies you want to invest in, you have to stick with the greatest companies in the world, the best company in its sector, right? And ultimately, what company is going to dominate over the next 10 years? That's the criteria. Now, we can get into profit margins and revenue and all of those things, but the basis of this whole thing, starting off, is choose 3 great companies that you want to invest in over the next 5 to 10 years. Stick to the 3. And when you get to 3, then you can expand it further. But it's important that you invest consistently in great companies and buy shares and grow those shares over a long period of time, so that compounding interest can ultimately make you more money quickly, right? And then secondly, 2 ETFs. So we got 3 great companies and we got 2 ETFs, right? So what is an ETF? An ETF is a group of companies within one fund. So you have individual stocks, you have companies like Apple, Microsoft, Amazon, Nvidia, etc. Right? So when you buy into Amazon or buy into Nvidia, you're buying shares of ownership within that one company. right? The more shares you own, the more percentage you own within that one company. You would have to get millions of shares for you to own any substantial amount of ownership, but you are buying into ownership of that business. If you're buying an ETF, you're buying into the group of all of the stocks within that ETF, right? The reason why ETFs are a good thing is because it provides you diversification and protection in a professionally based fund that's managed by someone that actually that's their career, is to manage a fund of great companies within that ETF, right? So if you own Apple and Apple goes down in price because something happens within this business, then you lose a lot of money at one time. Same thing with Microsoft, Amazon, etc. But if you own an ETF that has a whole bunch of stocks, one company is not going to affect the ETF nearly as much as the drawdown from if you own just one company, right? So you want to diversify within two ETFs to ensure that your portfolio isn't going to get killed by one or two or three stocks, right? So the second tip again is buying three stocks that you love and two ETFs. Now, the question is what ETFs to buy? Very easy to understand that they have ETFs for different sectors across the board. The one easiest ETF that you can look at is the total stock market ETFs, right? Which means is 500 S&P 500 companies in the United States have a ETF where they group all of the companies, all of the 500 and S&P 500 into one ETF, right? And that one ETF, if you're writing it down, is VOO. The ticker is VOO. Another ticker is VTI. They both are the total stock market ETF. One was just created, years ago. Another one is a little newer. So the share price for the ETF is a little different. But all in all, the allocations, the holdings within that ETF is the total stock market, which gives you, again, diversification and security and protection. If there are drawdowns in the stock market, it doesn't hurt you nearly as much, right? So again, second tip is to buy three great companies, identify those three companies, as well as identifying the two ETFs. Now, the other ETFs where they have ETFs for different sectors like technology. If you want to invest in technology ETF, it's QQQ. If you want to invest in semiconductors ETF, that is SMH. If you want to invest in healthcare ETF, that is XLV. Right? So you can do research and find these ETFs. If you want to invest more into a particular sector like healthcare, like semiconductors, technology, there are a whole bunch of different types of ETFs. What I would say is choose the S&P 500 ETF, which is either VOO or VTI, and then choose one of the sectors that you want to, you feel strongly about that you want to invest in, right? So investing is very much like, okay, I want to invest in technology stocks. Okay, cool. We know technology is continuing to move forward. We know our artificial intelligence is continuing to move forward. We also know that healthcare is going to drive the United States over the next 20 to 30 years because everyone needs drugs in this country, right? So if you want to invest in healthcare companies, that's always a good opportunity to do so. You can do it all within that ETF instead of choosing individual stocks, right? So again, three great companies, two ETFs. What do I buy? That is what you buy, right? If you, again, any comments, leave it in the comment section. Hit me up on YouTube, on Facebook, and we're going to talk about it, right? So again, if you like this content, man, this is amazing, amazing, amazing. This is coaching level stuff right now. Hit the like button, subscribe to the channel on YouTube as well as Facebook. Hit me up on Facebook, hit the like button, leave me a comment, and share this content out so that we can continue to push forward when it comes to helping others invest in the stock market. All right. So tip number 3, you have to be consistent and not get so wrapped up in the dollars of investing. Meaning, If you have $10 to invest today, invest the $10. If you got $25, $100, 1,000, it doesn't matter. The number is not necessarily as important as you think. It's the habits and the consistency of doing it over and over and over again. Right. When I first started, I think I started with $250 and that was my account. But every single time I get paid, every single time, we get any funds coming in the door, I'm always investing first, consistently, as if it's a bill. It is a requirement. It is a habit. You have to formulate that habit, as much as you go to the gym, as much as you pay your electricity bill, as much as whatever consistent thing you do on a daily basis, you have to make investing a part of that lifestyle. Right. So my recommendation is every time you get paid, there needs to be a percentage that comes out of your paycheck that goes straight into your brokerage account to invest. Right. Start off with 10%. If you making $1,000 off of a check, 10% of that 1,000 is 100. That $100 goes into your brokerage account every time you get paid to ensure that you continuously are growing your investments over a longer period of time. If you can raise that amount, depending on what you can afford, to 20% of your income, 30% of your income, shoot, if you are a young man, a young woman in the early 20s that don't have a lot of responsibilities and a lot of bills, 30, 40, 50% of your income invested in the market. I'm dead serious. Consistency is the most important thing when it comes to investing. You have to continue to be consistent when you're investing in the stock market. Right? If you are making 8% to 12% returns on your money and you consistently are putting money into your account, that account will grow higher than you can imagine, quicker than you can imagine. It's really just about the consistency of putting money in, right? You can also dollar cost average. This is part of being consistent, is if you are investing once a month, if you are investing once every 2 weeks, continuously put money in and buy the great companies and ETFs that you love consistently every paycheck, every month, every quarter, every year. It has to be, again, a lifestyle, a habit. You have to build it up like a muscle so that you can see the growth over a period of years. So your account can continue to grow, right? So that's tip number 3. Be consistent. It doesn't matter how small the number is. It doesn't matter where you are currently right now. Take the money. You can buy slices of shares. You don't have to buy the whole stock if you don't have the money, right? So an example of this is, let's say Apple is at $100 a share, and let's say you only have $50, right? Charles Schwab, other companies will give you the ability to buy $50 worth of a share price. So you don't necessarily need the whole 100 to buy one share of Apple. You can purchase a half of a share with your money or whatever that percentage is, right? So don't get discouraged if you see, Microsoft share prices at $515 today. If you got $100, buy that partial share of Microsoft and allow that money to grow. And when you get more, you just continue to add to that, partial share, and you will continue to see that growth over a long period of time. All right. So number 4, right? You have to learn and track your investments long term. You have to understand the stock market, right? You have to continue to grow your understanding. Reading is required. Reading is required. You have to understand the stocks that you are investing in. It is very, very much not ideal to invest in any company that you don't know. How do I get information? Honestly, at this point in this world that we live in, it is not hard to do research, right? Yahoo Finance is an amazing way to get information on a stock. I mean, if you go to Google and you put and you just say, "Hey, give me an analyst You go to ChatGPT AI, they'll break down a stock for you, stock prices, earnings estimates, profit margins, and everything, right? Get yourself around people that know more than you do, that can teach you some things, but also more importantly, you have to read for yourself. There are books like The Intelligent Investor. That's an amazing read, right? One Up on Wall Street when it comes to Peter Lynch, right? The Psychology of Money, The Millionaire Next Door. So many great books that you can read that can teach you about how to invest in the stock market, and that can give you a level of knowledge, wisdom, and understanding so that you can learn more about it, right? If you don't know, learn, do the research, get the information, and invest in yourself, invest of your knowledge, and get yourself surrounded in a soil base, right, that you can then grow when it comes to your knowledge, right? There are also groups out there when it comes to investing. I actually am in two different investment groups, one for option trading, one for stock market investing, and it just helps, right? All the information that you can receive, it just continues to help, and you continue to grow as an investor, right? So tip number 4 is you have to always learn more about investing, learn more about your investments. You got to know the businesses that you are invested in, right? Keep it simple, 3 great companies, and understand the business, understand how the stock price moves, why the stock price moves the way it moves, and you will become very, very much better at the overall understanding of the stock market and investing in general, right? That was tip number 4. Now, tip number 5 is about our outlook. You have to think long term at all times. Number 5, you have to think long term at all times, right? The long-term thought process outlook on the stock market is always have to be the most important thing for you, because you have to understand you don't make money in one day, in 1 year, in 5 years. Your money will compound over a 5 to 10 year to 20-year period, to where wealth is built by long-term outlooks. The stock price today will not be the stock price tomorrow, which will not be the stock price in a year, which will not be the stock price in 5 years, which will not be the stock price in 10 years. It is always about the forecast and the companies that you love, that you see that appreciation in that stock price over a 5 to 10 year period is going to make me a ton of money. The more shares I buy, the more great prices I can enter in, the more I can ultimately invest in these great companies, the more money I'm going to make long term. So it has to be a long term outlook. We cannot be so quick to sell and leave stocks. First of all, you're going to pay taxes. Every time you sell, you're going to pay taxes, right? And ultimately, long term, you're going to lose out on those gains and opportunities that you could have had, right? So in this new age, in this new world we live in, everybody wants, to get rich so quickly. They want money so fast. They don't understand the importance of compound interest and how you can make a lot of money if you are patient and you consistent and you look long term and look at where you could be in 5 to 10 years and 20 years, and not necessarily where you currently are right now. Right. So the greatest investor of our lifetime, of this lifetime in this century, is Warren Buffett. And Warren Buffett's, statement is, it's not about time. It's not about being in the market. Was it? It's not about what you buy. It's time in the market. Well, let's look at Warren Buffett. What do you say? Time in the market. Warren Buffett. Yeah, time in the market beats timing the market. So what he's saying is, a lot of people will look at stock prices and say, I'm trying to time it to where, I get in at the right time. He's saying that your overall time in the market is way more important. The longer you stay in the market, the more likely you are to make a lot of money instead of trying to wait for the perfect time to enter. Time in the market. And for a little while, I had to learn this myself. I've now gotten to a place where I only think long term. It has something that had to be built, had to be disciplined. I had to discipline in my mindset, discipline my thought process. I only think long term. I even option trade and make trades that are a year, 2 years out now. Right. So your outlook and thought process, the discipline, the consistency, all have to be there when it comes to investing in the stock market. But to start, right, we talked about, these tips to get started. One was we had to open up a brokerage account, right? We went over how to open up a brokerage account. Number two, understanding what you're investing in. Number three, start small, but be consistent when it comes to your investments. Number four, learn more about your investments, learn more about the companies that you love, and learn how to track your investments in a positive way using different platforms online as well as applications that you can do. And then number five, you have to think long-term outlook, long-term thought process, and long-term strategies, right? This is very, very much a beginner level conversation and practical tips to help you start today. I implore with everything that I have, investing is a requirement now, and it definitely will be a requirement in the future. If you are a parent right now, you have children, invest for your kids now. It's, again, long-term outlook, 10, 20, 30 years. Right? If you are under the age of 60, and I can argue that someone that's 60 should be investing also. If you are under the age of 60, there's no reason why you shouldn't be thinking about your retirement and how you should be investing for it right now. Right now. If you're in your early 20s, if you 18, start by yourself, individual, right? You have to be 18, open up an account, a brokerage account. If you're in your 20s, start now. Don't be me at 35 and you just starting because you just now getting information. No, start as early as you possibly can. We have to consider investing a requirement because the world we live in now, inflation's too high, right? Income doesn't match the rate of inflation. You have to allow money to grow for you passively, and you have to grow wealth in different ways to ultimately benefit you long term. So I wanted to make sure I put out this amazing live because I wanted to make sure that I pour into not just my close community, but also in a distant community, anyone that I can affect in a positive way when it comes to investing in the stock market. This is to me something that we need to teach everybody. If there were financial literacy classes and investing classes in high school, I think it would be a huge benefit. But for whatever reason, there is not a lot of that. So we have to get out here and spread the word when it comes to this investing conversation, and how we can then, build up our community as well as build up others. Right. So 5 tips to start investing today. Hey, leave me a comment on what if you found this information to be beneficial. If you have started your brokerage account, if you are starting investing, give me the 3 great companies that you love. Give me the 2 ETFs that you love, that you want to invest in long term. Hit the subscribe button if you're on YouTube. If you're on Facebook, go to my YouTube channel, hit the subscribe button, like the video for the YouTube algorithm. If you're on Facebook, follow me on Facebook as well as hit the like button and share this content when someone needs to hear it. This is for everybody. It doesn't matter if you are a parent, if you are a child, if you are a young adult. You need to understand how to invest in the stock market, the benefits, how you can make a lot of money over a long period of time, understanding how to get started and how to grow within the understanding of investing as a whole. I love you guys. I appreciate y'all. I'm out. Financial Blueprint, Antoine Smalls. Tap in with me tomorrow as we do stock market live on YouTube. That is a show I do every week where we go over the stock market as a whole. We review a bunch of different videos. We talk a bunch of different things, a bunch of different companies. That is more of an in-depth conversation of the stock market. But tap in with me tomorrow live on my YouTube channel. And I love you guys. I appreciate y'all. I'm out. Peace.